Bismillahir Rahmanir Rahim. Alhamdulillahi Rabbil Alameen. Wassalatu wassalam ala Sayyidil Mursaleen wa ala alihi wa sahbihi ajma'in. Assalamu alaikum wa rahmatullahi wa barakatuh. Your Excellency, Sheikh Abdulla Saoud Al-Thani, the Honorable Chairman of the IILM Governing Board and General Assembly, and the Governor, Qatar Central Bank, our respected Mashayikh, other distinguished speakers, members of the press, ladies and gentlemen, good morning, good afternoon, and good evening, depending on where you are. I would like to begin by extending a warm welcome to all of you here today. Welcome to the 5th Shari'ah Roundtable of the International Islamic Liquidity Management Corporation, the IILM. The theme of today's roundtable is Towards an Effective Shari'ah-Compliant Repo Market, Challenges and Effective and Alternatives. Today's roundtable is an initiative of the Shari'ah Committee of the IILM under the chairmanship of our respected Sheikh, Dr. Mohamed Elgari. For your kind information, this is the 5th edition of a series of roundtables organized by the IILM since the year 2013. Ladies and gentlemen, permit me to specially welcome the Honorable Chairman of the IILM Governing Board and General Assembly, His Excellency Sheikh Abdulla Al-Thani, who, despite his very busy schedule, agreed to give a special address at today's roundtable. In both his personal and official capacity, His Excellency has been very supportive of all the initiatives of the IILM, which are geared toward deepening the Islamic capital market. I thank Your Excellency and other governors of the IILM Governing Board for your leadership role in repositioning the global Islamic financial services industry. I would also like to take a moment to extend IILM's sincere appreciation to our co-organizers of today's event for their immense support and thoughtful contributions. I thank the chief executives of all our partner organizations for agreeing to collaborate with us in today's event. Today's event demonstrates smart partnership and collaboration among the international Islamic infrastructure institutions in the global Islamic financial services industry to work together on shared objectives towards developing the industry. I thank the Islamic Development Bank Group, the ISDB, the International Islamic Financial Markets, that's the IFFM, the Islamic Financial Services Board, the IFSB, and the Accounting and Auditing Organization for Islamic Financial Institutions, AOFI. I also thank our local partner, the International Shari'ah Research Academy for Islamic Finance, ISRA, for its usual support. As most of you are aware, the IILM's mandate is to create and issue Shari'ah-compliant financial instruments to facilitate and enhance cross-border investment flows, and to increase financial stability by creating high-quality liquid Shari'ah-compliant financial instruments for institutions offering Islamic financial services. To further this mandate, we have convened today to discuss Islamic Repo with the objective of jumpstarting a cross-border market that shows great potential, but currently underutilized by the Islamic financial services industry. The coronavirus pandemic will serve as a wake-up call and should be a catalyst for much-needed progress in the development of Islamic financial markets globally. More issuers of short-term Islamic instruments, as well as broad and active investors, will definitely support a deeper Islamic money market and the establishment of a much-needed Islamic benchmark yield curve for the Islamic financial services industry, especially with the upcoming LIBOR transition. The IILM's efforts focusing on the short end of the curve by consistently issuing benchmark size sovereign-backed sukuk with over $1 billion every month in various short-term tenures could support the creation of a low-risk or even a risk-free rate curve. The liquidity stress due to the pandemic has also clearly identified the need for an effective Islamic repo cross-border market to support Islamic banks' short-term funding needs globally. The lack of harmonization and wide Sharia acceptance have prevented the development of a strong, liquid Islamic repo market, and thus deny many Islamic banks an additional source of liquidity outside their own jurisdictions. Ladies and gentlemen, for those who have been following the developments in the industry for the past few decades, you will recall that the pioneering efforts toward developing an Islamic repo structure and standardized documentation were carried out by the International Islamic Financial Markets, the IIFM, over a decade ago, where it released the IIFM reference paper on Iyadah to Shari'ah and collateralization. Such commendable efforts have yielded significant results in different jurisdictions where various structures of Islamic repo have been introduced. However, as the biggest room in the world remains the room for improvement, there are a number of practical issues that require further attention of all stakeholders. This is more important in a bid to come up with a widely acceptable structure that could be used for the cross-border Islamic repo market. Following the release of the IFSB's Islamic Repo Guidance Note in 2015, there has been market activity, although this has yet to reach the targeted volumes. Greater understanding of issues and challenges faced by Islamic banks can foster better volumes of Islamic repo. Although a look at alternative forms of liquidity management tools is warranted, the Islamic repo offers a ready solution that needs to be repackaged from a Sharia perspective. In a similar vein, as part of its core objective in setting global Sharia standards, AOFI also issues a standard number 58 on Iyadah to Shari'ah Repo alternative in March 2017. The standard explains the concept and rules of buyback transactions for tangible and intangible assets. The standard also provides guidance on the contemporary application of repo in the business operations of Islamic financial institutions. In light of recent global events, particularly the coronavirus pandemic, the need for more cross-border liquidity instruments in the Islamic space has not only increased exponentially, but has become urgent as well. That brings me to the reason we are gathered here today. We have organized this roundtable into 3 main sessions. The first is aptly named Setting the Scene, where the panelists will address the current state of Islamic repo market and the immediate challenges faced in its implementation. The focus of session 2 is to foster a healthy and constructive debate addressing the Sharia rulings and a roadmap to implementation of an acceptable cross-border Islamic repo structure, that is, making it work. Session 3 then moves on to the practical aspects of the proposed cross-border Islamic repo facility. The focus here will be product standardization, documentation, and the associated legal challenges. Although both session 1 and 3 serve as important bookends for this roundtable, the predominant aim of this roundtable is centered on the discussion among the respective Sharia scholars in session 2, with the aim of addressing the Sharia issues identified in structuring an acceptable cross-border Islamic repo facility. Finally, ladies and gentlemen, what do we intend to achieve collectively after the roundtable? Our plan is to collaborate with our industry partners to come up with an acceptable cross-border Islamic repo facility, which will not only be subject to standard documentation, but could also be explored as an additional cross-border Islamic liquidity tool for institutions offering Islamic financial services across the world. In collaboration with our industry partners and international Islamic infrastructure institutions, we want to make an impact. We have the opportunity now. COVID has exposed the urgent need for more Islamic liquidity management tools. We have the major industry players to effect this positive change, and this is the time to act. While we strive to come up with a cross-border Islamic repo framework that will fully comply with all Sharia requirements, we must also ensure that such structure will be conventionally competitive and viable in the practical sense of it. Inshallah, with this in mind, we embark on what we hope will be a pace setter for the industry. Ladies and gentlemen, we have carefully selected a great line of speakers for today's roundtable. So please grab your coffee and stay tuned throughout the event. Feel free to use the questions and answers tab to ask questions, provide your valuable comments that could be considered during the ongoing discussion. Thank you again, and we hope you enjoy the roundtable. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Alaykum assalam wa rahmatullahi wa barakatuh.
Thank you, Dr. Umar. The esteemed Professor Dr. Mohamed Elgari, Chairman of the IILM Sharia Committee, will now give his welcoming remarks.
I just want to inform you that our chairman, Dr. Mohamed Elgari, is having some problems to key in. So he delegated me to read his welcoming remarks. Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen wa salatu wa salam ala Rasulullah wa ba'd. His Excellency, Sheikh Abdulla Saoud Al-Thani, Chairman of the IILM Governing Board, and then the Governor of the Central Bank of Qatar, His Excellency Dr. Umar Hussein, CEO of IILM, respected scholars, brothers and sisters, Assalamu alaikum wa rahmatullahi wa barakatuh. Thank you very much for giving me the opportunity to welcome you today. As you all know, Islamic finance was able to grow and flourish through a relentless effort of innovation and continually coming up with solutions that meet with Sharia requirements while at the same time accommodating all the risks and regulatory requirements of the banking sector. Since the very beginning, these Islamic solutions came as the result of collaboration of bankers, legal experts, and Sharia scholars. Today, we are engaging in one such effort to perfect a solution to one of the challenges facing Islamic finance in the area of liquidity management. The repurchase agreement, or Repo, which is the focus of this roundtable, is one of the most effective tools for liquidity management. On the face of it, Repo is a transaction in which party sells. Repo is a transaction in which party A sells certain securities to party B for an amount of cash, while at the same time committing itself to buy back equivalent securities at a future date for a fixed amount of money, which is higher than the original sale price. In economic terms, this is basically party A borrowing money from party B against a collateral and payment of interest. Clearly, this will not be permissible under Islamic law, but the Repo or Repo-like instrument is an instrument that cannot do without instrument when it comes to liquidity management. Nothing can testify to this more than the fact that Repo transaction is the US alone in trillions of dollars daily. Islamic financial institutions were left behind in the past, their respective countries, because they cannot participate in this interest-based transaction. We believe it is possible to design a structure that meets Sharia requirements and at the same time deliver the same economic outcome. Creating an active repo market in which Islamic financial institutions can play a role depends almost entirely on finding such solution. This roundtable will go a long way. This roundtable will go a long way in trying to contribute to this effort, building on effort already started in many places. We hope through discussion and deliberations, we can reach the most effective Sharia compliance solution, one that is doable and can be accepted by Sharia boards and financial regulators. Before we get started, I would like to express my sincere appreciations to all of you who generously are helping us make this event a successful one. Thank you very much. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Thank you, Dr. Yusuf and Dr. Elgari. Just a quick, moving on, we have a special address by His Excellency Sheikh Abdulla Saoud Al-Thani, Governor of Qatar Central Bank and Chairman of the IILM Governing Board.
Yes, Dr. Umar, CEO of the IILM, Professor Dr. Mohamed Ali, Chairman of the IILM Shari'ah Committee, and distinguished speakers and participants of the IILM Fifth Roundtable. Assalamu alaikum and very good morning or good afternoon to all of you, depending on your time zone. Dr. Umar, thank you very much for inviting me here today to give opening remark in the roundtable before this distinguished audience of professionals. I also congratulate you and your team on organizing this roundtable. The recent IFSP stability report indicates that Sukuk markets proved to be fairly resilient in 2020 despite the unprecedented and wide-ranging impact of the global COVID-19 pandemic. The recent IFSP stability report also, I would like, so the global issuance of the Sukuk has grown significantly over the last decade, reflecting increasing interest from sovereign, multilateral institutions and corporations from developed as well as emerging economies. However, the availability of Sharia compliant short-term instruments or Sukuk have been a key issue for development of Islamic finance industry. The organization of this roundtable is a testimony of this fact. In the regulatory world, Sukuk serves a potential high-quality liquid asset for regulatory purpose, which is something that is of increasing importance to the regulators in the implementation of Basel III liquidity framework. But developing the Sukuk requires improvement to the legal and regulatory framework and strengthening the infrastructure, including developing the secondary market. It is no secret that many of organizations here today have been working for over decades to create a product that would be close to a conventional repo and face many challenges regarding the incompatibilities of repos with Islamic rules and principles, along with the challenge of standardization, prudential treatment, and legal documentation. The need to create an Islamic repo to support the growth of Islamic finance is greater than ever. Basel III, as well as its equivalent IFSP, rules on a high-quality liquid asset have made improving liquidity management a more pressing concern for Islamic banks. In this respect, the establishment of the IILM as a cross-border liquidity tools provider is a good example to help the institutions as well as regulators to cope with the Sharia compliance liquidity issues. As we see strong demand for liquidity products across the GCC, UK, and Southeast Asia, with the continual growth of Islamic finance, Sharia compliance repo market will help a great deal to the various jurisdictions in the expanding the secondary Sukuk market, which is currently dominated by a buy and hold investor. Ideally, an instrument for Sharia compliant repo market should blend perfectly with the fiscal and monetary policies tool established by central banks to maintain the flow of liquidity within the economy and serve all financial institutions. This highlights that there is role for every institution in this development, including market players, standard setting bodies, supervisory authority, and Sharia bodies. To conclude, I am pleased to be here as the roundtable provides a valuable platform to discuss key issues of designing a Sharia compliance repo market, along with the right instruments which are not only Sharia compliant but also fulfill the various legal and regulatory requirements for liquidity purpose. I wish you a very productive and successful roundtable today. Thank you very much for everybody. Thank you.
Thank you. Thank you, Your Excellency. We begin